Welcome back to the Digital Asset Report. Crypto is starting the week with a relief bounce, but not a clean breakout. Bitcoin is trading near $64,700. Ethereum is around $1,740. Macro risk is still driving the tape. ETF flows remain uneven, and traders are waiting for the next inflation signal before calling this a real turn following last week's Fed meeting. Perhaps the biggest news this week is that the New York Stock Exchange parent company Intercontinental Exchange is moving deeper into the crypto market. ICE and OKX have formed a 50-50 joint venture called OKX ICE. The plan is to build regulated digital financial products, including tokenized securities, crypto future access, and brokerage infrastructure for United States customers. The venture intends to pursue futures, commission merchant, and broker-dealer licenses. This is not just another exchange partnership. ICE runs some of the most important trading infrastructure in the world, and OKX brings a global crypto user base and deep digital asset plumbing. Together, they're bringing tokenized securities, 24-hour markets, crypto futures, and on-chain settlement into the same regulated stack. Meanwhile, representatives in Washington, D.C. are still discussing the Clarity Act. Here is Senator Bill Hagerty, who authored the Genius Act, speaking on clarity.
Where the Clarity Act is taking us, it's creating the type of certainty that's necessary to bring the entire digital asset framework into full-blown opportunity here in America. If you look back at the Genius Act that I authored, that brought America into the digital payments arena. We now are in a position where America will continue to lead as the reserve currency of the world because we now have a reserve digital dollar that's backed dollar for dollar by short-term U.S. Treasury securities. As we move more broadly into the arena, digital assets have a much more varied use. We've dealt with it, I think, to a large extent, and I'm with Kevin Kramer. We need to get this done. It's important to get it done. It's critical to maintain America's innovation edge. From a process standpoint, I think he's likely right. This is something that will be more a matter of focus after the 4th of July recess period, but I certainly hope to see it done before the end of July.
Across the world, the Bank of England recently softened its stablecoin framework. The central bank dropped proposed individual holding caps and moved to a £40 billion issuance limit per systemic sterling stablecoin. It also raised the share of reserves that can sit in short-term government debt to 70%, with the rest still held in non-interest-bearing central bank deposits. The rule set is still conservative, but this is a meaningful shift. The United Kingdom is trying to keep stablecoins inside the payment system without pushing the market offshore. On the tokenization front, Baillie Gifford launched a tokenized fixed income fund with BNY. The Baillie Gifford Enhanced Yield Fund is a dollar-denominated, actively managed short-duration corporate bond portfolio. It uses Ethereum and Solana, while BNY provides tokenization and wallet infrastructure. This has all the pieces of institutional tokenization: a known asset manager, a major custody bank, a regulated fund structure, and public blockchains underneath it all. Also this week, MoneyGram has joined Solana as a validator. That means it's helping process transactions and secure the network, not just using it from the outside. The move follows MoneyGram's MGUSD stablecoin launch on Stellar earlier this month. Together, it shows the company is building across multiple public chains as it pushes deeper into blockchain-based payments. Japan also added a small but important institutional signal. A corporate pension fund serving roughly 1,200 small and medium-sized businesses reportedly plans to allocate about 1% of assets to crypto in the fiscal year 2026. While the dollar amount is modest, the signal is quite interesting. Pensions tend to move slowly, and even a small sleeve says crypto is being tested as a long-term portfolio holding. Earlier mover pensions also serve as case studies for other allocators of the same type. And finally, security remains a weak spot. Taiko halted its Ethereum Layer 2 network after a bridge exploit drained about $1.7 million before the attack was contained. The attacker used forged withdrawal proofs to release real assets on Ethereum. Bridges remain one of the most important risk points in crypto infrastructure to this day. Put all the news together this week, and the week was about convergence. TradFi exchange operators are moving towards tokenized markets. Central banks are shaping stablecoin rules. Asset managers are issuing funds on-chain. Payment companies are operating network infrastructure. Pensions are testing allocation models. Prices are still waiting for macro clarity, but the financial stack keeps moving on-chain. That's it for today. If you enjoyed this video, be sure to give us a like and follow BitGo for more.